instead of trying to raise money again, I went for a little different avenue, and I went for the human capital this time. So, to use your term there. So what I did was I asked my broker if he wanted a partner, and then his partner in a lot of real estate deals is one of the biggest property managers in town. And so I thought that might be handy to have in my back pocket. And so those two and I sat down, and we put the deal together, and we're like, okay, this is what we're going to pay. And John was going to manage it, and my broker, he wrote up everything. And so really I found the deal, and we went with it.
Here's the one.
I have a dream.
With great power comes great responsibility.
I could do this all day.
This is it. Don't get scared now.
They may take our lives, but they'll never take our freedom.
Cinderella's story out of nowhere.
It's in the hole. That the only thing we have to fear is fear itself.
So it is a pleasure to have you here, Mr. Joshua Oak. Do you go by Joshua or Josh?
Josh. Yeah, Josh. And it's a pleasure to be here. I appreciate the opportunity. Thank you.
Yeah, me too. I go by Josh, and it's a pleasure for us to have you here. There is so much to share with the audience. But before we get into all that, for those of us who have not met you yet, Joshua or Josh, could you share your backstory, where you live, and what brought you here today?
Yeah, you betcha. So I live in Montrose, Colorado. I grew up in Kansas in the middle of nowhere. And what brought me here today was I listened to a lot of podcasts. I started listening to podcasts in 2013 just as a way to educate myself. I had no background in real estate, no education, and podcasting is where I've gotten all that education. And as Jim Rohn says, formal education will make you a living, but self-education will make you wealthy. And
beautiful quote.
Yeah, it is. And that's where I'm at with it. So that's kind of how I got here. I was listening to the Capital Hacking podcast a couple of weeks ago, and they mentioned, some opportunities coming up, looking for a podcasting network and expanding their podcast. And I was like, well, why wouldn't I do that? So here I am. Yeah. Well, I mean, it's just such an honor to have you here. And for all of us listening, this is what you dream about, Josh, just to share behind the curtain. This is a total behind the scenes type episode, but years ago, my buddy Eric Cabral and I are sitting there. It's like 2018. I'm telling him, here's our dreams. And someday people will enjoy listening to the show. They'll get value, and eventually we'll start interacting with them in direct ways and help them. And so much of that has happened over the years, but this feels like the culmination of that, where I think you said you've been listening for, I don't know, probably 200 episodes. Yeah, somewhere in there. Yeah. Since episode 16. Which, by the way, who was that? Was that Richard Wilson? What do you think was your first show that you listened to? I believe it was MC Lobsher. Oh, I love that guy. And then I went back, and the one before him was Russ Gray, and I can't not listen to a Russ Gray episode. I don't care what the platform is. So for those of us who don't know either of those fellas yet, hold on. Sit down, sit tight, go to the notes, and click on first MC's show. Is Cashflow Ninja, good friend, good partner. And he's the best, really just a great guy, great education, great community with the Cashflow Ninja. Then Russell Gray, Josh, do you think people know who he is, or just you and I, geeks, geeks? If they don't, they certainly should. They should. Co-host Real Estate Guys, just an amazing educator. He is. I love him. Yeah, so that's really the granddaddy show of all time. It's called the Real Estate Guys Radio. 26 years on the either radio or podcast collectively. Yep. And Russell Gray, I consider him a mentor. Whenever I'm with him at events, I just sit with him. I just listen to his stories. I mean, he's so good at explaining things, isn't he? He's a great teacher. Yeah, he's my favorite. I listen to a lot of them, but Russ is so articulate and knowledgeable that it's impossible not to learn something every time. Yeah. I was listening to him and Robert Helms this morning and driving in, and they were talking just so great. The way they here's one of the things they do. This is a podcast behind the scenes, is they'll stop and make sure the audience is not left behind. And they'll say, Russell just said the word sponsor, general partner. What is that? That's really the person who's been given the capital and is going to go to play. They stop and they explain it so you can get caught up no matter where you're at in your knowledge base. Yep. They're very good educators, the best I've come across. So now we're going to get into the meat and potatoes of today, Mr. Josh Oak. Why don't you tell us a little more about your success or your progress, or progress, as my Canadian brethren say, in the world of investing? So we heard the backstories from 2013, got involved in podcast consumption and learning. So tell us how that went since 2013. So I listened to Bigger Pockets a lot early on. I was trying to learn how to buy a house just to live in, but I stumbled across them. And so the first thing I did was we ended up buying that house. I was like, well, now I'm into BP, and it's like, okay, so if I live here for a year, I can rent it out and then go buy another house and they'll pay my mortgage. So that's what I did.
Yeah.
I went and bought another house, rented it out, made $400 a month cash flow. That was my first cash flow. It's like, all right. So that clicked. And then from there, my cousins were doing some stuff in Kansas. And so I was talking with those guys, and they said, hey, we got a little bit of an opportunity. So I borrowed my TSP. I'm a federal employee. So I borrowed half of my TSP, which was 30 grand.
Okay.
And I sent it to those guys, and the bank there would let you cross-collateralize.
Yeah.
So we were able to buy 5 houses with it.
What? Whoa. Okay. Okay. We're going to do a deal deep dive in a moment. Keep going. I want to come back to that.
For sure.
The way you did a loan off your retirement, then you did a cross-collateralized. We're going to come back to that. Don't worry, folks. You and I are like, I got my pencil out now. But go back, Josh. Keep going. I don't want to interrupt your flow. Keep going.
Sure. Okay. So we got into those 5 houses. Those guys, man, I think they bought like 140 houses in a year. It was something crazy with that cross-collateralization. Wow. Anyway, I came through that. We got it done, got the 5 houses, got a little more cash flow. It's like, man, this is awesome. It's working. So I came across another deal that was off market. I got my real estate license. My broker was like, hey, he's like, I'm not going to put this deal together if you want it. And it was a 6 unit, and it was going to go on the market the next week for 400. And I tried everything I could to get people to loan me 100,000, partner with me to get into it. And I tried everything. My brother tried everything, and we just couldn't get anyone to get us the money, loan us the money, whatever it was. We tried everything we could. So that was my first attempt at raising money, if you will. Anyway, we didn't get into that deal. So I found another deal a couple years later, just by talking to people, mentioning real estate. People don't know what they don't know. So if you don't mention it, they're not going to know you're interested. Yeah. I was talking to this guy about it, and he was a coworker, and he's like, hey, my mom might have something to sell you. And I was like, all right. So I called her, and it was a 12-unit apartment.
Wow.
And she was tired of her property manager. She wasn't very good. And so I was like, all right, well, let's, try to put something together. And so she shot me the price, $650. And I said, all right, let me think about it. And instead of trying to raise money again, I went for a little different avenue, and I went for the human capital this time. So to use your term, right?
I love that term. We'll keep going, baby. I got comments and questions.
What I did was I asked my broker if he wanted a partner, and then his partner in a lot of real estate deals is one of the biggest property managers in town. And so I thought that might be handy to have in my back pocket. And so those two and I sat down, and we put the deal together, and we're like, okay, this is what we're going to pay. And John was going to manage it. And my broker, he wrote up everything. And so really I found the deal, and we went with it. Where it gets interesting is how I got the money to pay for it. So I didn't have really any money to put down. I'm just a lowly firefighter for the government. So to get the money out, I needed to sell my house to get the equity out. Well, my buddy liked my house. He wanted to buy it. So we were going to have to sell his house. All right. So I listed his house, and then I needed to find another house for me to buy. I heard a coworker talking about wanting to sell. I liked his house, and I was like, all right, I'll buy it. Okay. So we got to that point. And so I had to buy the house, sell my buddy my house, and then sell his house all within a couple of days just to get the funding out. And I also had to take a $20,000 loan from a coworker because I was going to be holding both houses at the same time before I got paid out from selling mine. And so anyway, we put all that together. And then 2 days later, we were supposed to close on the apartments. Well, that was like right at the beginning of COVID, March 2020. And the banks, like the wiring, nothing was coming through. And so I'm sitting here like, I just put this whole thing together. It took me 2 months of just sweating, and my wife was quite nervous. But anyway, we put it all together. A day before closing on the apartments, the wire came through, and yeah, for 2 years we've had these apartments, and the cash flow like crazy, and it's awesome.
Everybody take a deep breath. Is this not the best type of stories? Oh man, we're going to dissect a few and comment on just like you are everything we'd ever have thought of. If you use the capital hacking strategies that we try to bring up in this show, everybody could follow Josh's story, Josh Oak's story, Mr. Oak, the oak tree, because we're both called Josh, so we got to give you a nickname, Mr. Oak. So the oak tree over here, what a journey of, okay. So the funny thing was you went and tried to raise capital, and this was for a 6-unit deal. You tried everything.
Yep.
There's 3 stories here. There's the first story is where you were the lender or the investor, right? Where you helped a group. We're going to come back to, let's break down each story and talk about the highlights. The investor story was how you got your first property, right? Or did you partner with that group that ended up buying hundreds of houses?
Yeah. I mean, we partnered 50-50 on it. I had the cash. They found the deal.
Okay.
Yeah.
So you did the 50-50 strategy where I'll bring the cash, you do all the work. When we sell it, we split it. Now, do you split it after you get paid back the cash, of course, right?
Correct.
All right. So if you put 50 in and the whole project makes 100, you don't get just your 50 back. You get your 50 plus 25,000. Yep. Okay. Got it. Great strategy. Wanted to teach us something there, though. You wanted to teach our audience about the loan you used. Was that on your retirement account?
Oh, yeah, it was. So the Tsp Thrift Saving Plan is the government's, 401k plan or whatever it is. It's how you save for your retirement. And there's a loan in there that you can borrow up to 50% or 50 grand, whichever is less. And I had 60,000 in mine. So I was able to borrow 30 grand.
All right. Now,
that's what I did.
You're here today. This is so rich, guys. You guys are listening to great stories about a guy who knows how to do capital hacking the right way. He just figures things out, blends his cash with his human talents, and creates wealth one step at a time. But let's not overlook why you're here, though, Josh. You're here not only to share your life story, but to actually, quote unquote, audition. You are auditioning right now. And you too, who are listening, could audition. Just go to capitalhacking.com, fill out that fancy web form, and let us know if you would like an audition. Because what are you auditioning for? Well, you're auditioning to, could you be on a rotation as a guest host? Could you be on rotation as a co-host? Should you get a shot at that, where we go out and find a guest, and then you join me as my co-host? You're kind of on display right now, brother. So as I ask you questions about the stories we just heard, we're putting you on the spot as a true co-host, right? The Russell Gray, Josh, he always dissects his own teachings and makes them accessible to everybody. So I'm going to put you on the spot for all 3 of your stories, and that'll be the audition. And with that audition, you got to wow the crowd, bro. You got to wow the audience. And before we get into this wowing the audience, we're going to have to hear from my lovely wife, Melanie, over at Accountable Equity, because she loves saying hi to everybody every show. But when we come back, we're going to tell everybody, not only can you do this audition, which is scary. I'm sure Josh is sweating over there. He has a cup of water because he's are you nervous as heck, Josh?
I'm not as bad as I thought I would be.
All right. Well, the oak tree, you're an oak tree. You're not afraid of anything. But we're also going to tell people how you can vote for Josh, because this is interactive audio podcasting, audio masterminding. So we will be right back after Melanie says hello.
Hi, this is Melanie McCallan. Josh and I are just so grateful for the many investors who already joined us at Accountable Equity. Accountable Equity is so much more than a capital group. It's really a community of accredited investors that want to learn and grow together. I just want to personally invite you, if you want to find out more about this type of investment and see if it's right for you and your family, please visit us at accountableequity.com.
Thanks, Melanie. Thank you, Hal Elrod. Hey, guys, we're back. So Hal Elrod, always nice to hear from you every show. But in the meantime, we are back. This is where it gets nerve-wracking for Josh Oak. Okay, how good of a podcaster are you? And I know it's your first time, right? Have you ever even been a guest?
I've never even been a guest.
Okay. You need to wow the audience, brother. And the clock has now begun. Ready, set, go. All right. Could you break down the story? We started doing it a little before the break. The things you learned when doing your first ever deal where you took the loan. First of all, almost nobody on the show talked about that strategy before. So you're one of the first in 240 some shows to teach that idea of borrowing against your retirement. So please explain that to our audience, and then teach them cross-collateralization. Ready, set, go.
All right. So yeah, I didn't have the money for a down payment, and I knew that I wanted to partner with my cousin in Kansas for those houses. He was growing exponentially, and I wanted to get in on it. And so I had this $60,000 in my retirement account. and it was doing me no good. I don't even really like retirement accounts. So that's for another day. And so I decided if I can access that money, borrow it, buy real estate, get cash flow, and go that route, that's what I'm going to do. So I went through the process, borrowed the $30,000, and I believe the interest rate was at like 2.5%. So basically free money.
Right.
And so I was borrowing at 2.5%, and then I pay it back to myself. So it cost me truly nothing to borrow against it. And so I wired them the money, and then throughout, I would say the next 12 to 14 months, they were able to pick up the 5 houses with it. And to be honest with you, I've only ever seen 2 of them. I've never been to them to see them. But with that, I got the 5 houses, and each one was cash flowing about $100 a month per door for me. And so it was my second taste of a good cash flowing property. And now, as far as the cross-collateralization goes, there was no way I was ever going to be able to buy 5 houses with 30 grand. And so the bank they were using was a small community bank, and they allowed what they called cross-collateralization. And so say the first house was $100,000, was what it was worth. We paid 60. So the bank looks at it as there's $40,000 in equity there. So instead of us having to bring the down payment for the next house, they let us use the 40 grand in equity in that next house. And by doing that, we bought 2 houses and didn't even have to bring any money to the closing table. We just had enough equity in the other properties. They were bought right. And so we were able to go about it that way. And we got the 5 houses with 30 grand. They won't let us do that anymore. But at the time they did, and we took advantage of it.
Yeah, that's awesome. And honestly, it's both awesome. And this is, time flies. You're listening to these great shows. You're listening to great people like Mr. Oak, the Oak Tree, and you realize it takes many times hearing something similar to what you just said before it really becomes reality. I remember you said you were listening to Bigger Pockets trying to buy yourself a house. Yep. And then at some point it clicked, right? It all clicked. Oh, the cash flow. You get your first house and then you make money on it and you feel cash flow come in. And something like that was when your mind somehow absorbed it, right? Yep. Is that what you were trying to get? Tell us what that felt like. And that's what I'm trying to do for people right now listening to your story.
Sure. So, I mean, initially, I read Rich Dad Poor Dad a long time ago. And it's like, boom, I planted a little seed. And then listening to Bigger Pockets, really by accident, they planted another seed, and that one actually started to grow. And so by continuing to listen to Bigger Pockets, like you just said, I heard stuff enough times over and over and over, and from enough people that it finally was like, okay, it works for enough people across here that it can work for me too. And so that's why I decided, I figured the easiest and the safest was to go ahead and buy my house and then rent it out after living there in a year, and then bought another house, rented it out. I made my cash flow. And once the cash flow came in, it really solidified in my mind that 1, I could do it. And 2, this thing is actually real. Yeah. And really anybody can do it.
Yeah. Already very impressive. So if you're loving Josh Oak, here's how you can support his audition. Sadly, you're not in the room with me and you're not in his room because he's in Colorado, but you do have an iPhone in your hand or a fancy Android. So if you go to whatever app you're using to listen to this show and hit review, of course, you love this guy 5-star level. And you're like, you could put right in the subject line, Josh Oak's the man, or something like that. And then in the body of the review, tell us why you like Josh Oak. Is it because he's got the name Oak Tree? I mean, it's just a great name. We could call him the Live Oak, which is what they have down in Texas. We could come up with all kinds of nicknames, put his fake nickname in there. And what we're going to do is have Josh Oak, Mr. Oak, come back with all the reviews that he garners because of you, the loyal, lovely audience of listeners who are part of this audio mastermind. The more support you give us, and then you can even say, Josh, you know what I like? I like Mr. Oak's way of explaining things. I think he should be in the running as a co-host. Or that dude's better than you, McAllen. Get off the damn show and let him host. So either way you want it, just write it down. Now we're going to keep going. We're going to keep going, folks. It's not over yet. We're going to get to the second awesome story Mr. Oak shared, and we're going to dissect what we can learn from that. And there's something really crazy about your second story that correlates to this show's purpose today. 6 units. It's the deal that did not happen, right, Mr. Oak?
You got it.
Okay. Why didn't this deal happen? Was it a dumb idea on your part? Was it a bad mathematical problem, like you would have failed and lost your shirt? Was it a bad deal? Is that why it failed?
Absolutely not. No, it was a fantastic deal. And every time I drive by it to this day, I cringe a little bit.
Okay. So how many years have gone by?
I believe that was 2016, so 6.
Okay. You would have made tons of money, right? What would have the deal looked like? What was the purchase price? What do you think the current valuation, and what do you think the cash flow is?
Oh man. So
guesses are fine. Just give us ballpark.
yeah, purchase price was $400,000.
And it was 6 units for $400,000. That sounds incredible. Okay.
Yep, and it was off market. So, I mean, had I been able to bring it, it would have never went on the market. And the day that it did go on the market, obviously it sold. Current rents at that time, I believe, were $650
each unit.
Each unit, yeah. And then now they're getting $1,000 or $1,100 a unit for it.
Okay. And so basically the property's at least tripled in value. At least.
Yep.
And you would have been cash flowing like a champion for all those years. So therein lies, this is so important, folks, why capital hacking was created. We believe, this is a statement of belief, that there's many wonderful oak trees out there, or live oaks, or Joshua oaks, all the oaks you can think of that have deals, and that they're listening to this audience they're in this audio mastermind right now. So we have brainstormed Mr. Oak, and we are in the process next week of starting the first ever crowd fund we've ever done. And the crowd fund will be the Capital Hacking Community Crowd Fund. And what it means is you, listeners, Mr. Oak, the co-hosts that get on the show, we're going to be interviewing a lot of guests. We're going to move to a full network 7 days a week in the next few months. And we're getting ready. This is the audition rounds. And eventually we will have the ability for people to put $5,000, $10,000 into a fund. Might be $10,000 minimum. We may. But you don't have to be accredited to be in a crowd fund. And it'll take all summer and all fall for us to teach people that, because over at Accountable Equity, those funds are for accredited investors, which means you have to have very high net worth, $1 million or high income. A crowd fund is available by a different law, and a different law that allows investors to not be accredited. And what we're going to do with that fund, Mr. Oak, is invest in Josh Oak's deal in 2016. We would have been your investor. Isn't that the coolest thing in the world?
Absolutely. I'm very glad you guys are doing that, and I'll probably participate. I love that you guys are doing that.
Yeah,
and everybody else for doing that.
Yeah, it's going to be great. I think the pent-up demand we've always had for years, Scott Bindis will tell you, of people that have been trying to join Accountable Equity. I would say hundreds and hundreds of people that just don't meet the criteria of 1 million, but get how deals work, and definitely don't believe in Wall Street, or they barely believe in Wall Street. You know what I mean? And they would rather see a deal. And so now we'll get to this Shark Tank effect, where all the teammates on the capital hacking community will put together a decision-making committee, and they'll evaluate deals, and we'll let the guests be the deal finders, and they can pitch their deal. And if it's a good deal and we'll make money for the families that invest, we'll do it. So anyway, that's exciting. So that's story 2 that I wanted to just use as a way to drive home how good of a deal that would have been for the capital hacking community had we known you back then.
Yeah, it would have. And
the last story is my favorite story. And the last story, we'll call it, I would say it's a high level deal design. So let's remember here a little bit. It has to do with a 12 unit.
Yep.
It has to do with how you found the deal is the number one thing I wanted to talk about. I want you to drill home that and talk about how everybody can do that.
Sure.
Okay. And then, because remember, your co-host auditioning right now.
Yep.
So what can we learn from your 12 unit deal that we can implement for many other people can implement? Go ahead.
All right. So yeah, the 12 unit and how I found it. So I got to the point where I was like, okay, I need to get into some sort of an investment. And so I've learned throughout all the podcasts that I listen to, like, if you just talk about it, if you just get it out there, if people just know that you're interested in it, you don't know who owns what, where, or what their situation is. And so in this case, her situation was that she was tired of her property manager. She wasn't doing a great job. Only 9 of the units were full. And frankly, she bought it in 2011 for dirt cheap. And so she had made her capital appreciation, and she was just kind of ready to let it go. She wanted to move on and move into a new investment. And I just happened to ask her son, who's a coworker, at the right time. She had just mentioned it to him that she was thinking about selling. And so he told me, hey, my mom might be interested in selling this. I got her number and I called her up. And I didn't know her, but I asked her, I said, what's the situation? She told me, and we went through kind of that whole thing. And she told me that like a year and a half prior, she had it listed as a single listing for 800 grand. But the guy backed out because he wanted $100,000 credit for a parking lot. And so she said she backed out of the deal. And then I called her a year and a half later, and we ended up getting for 650. So even less than that $100,000 parking lot would cost. But the thing was, we worked it. So we put the contract together. We charged no realtor fees. It was on her timeline. So she was going to do a 1031. And so we told her, we're like, hey, no problem. We'll work on your timeline. Whatever you want us to do, whenever you want us to close, that's what we'll do. And so that's what we did. It was a win-win for everybody. And it was a win-win for me too, because I got a better relationship with one of the biggest property managers in town and my broker. And so it was awesome because I found the deal, and really that's all I've done with it. I don't manage it. I haven't had to do any of the fixing, painting, any of that kind of stuff, because I strategically partnered with a property manager. And so it's worked out fantastic for me.
And so how did you break the equity up? If there's 100% ownership of this, how did it go?
Thirds. So each one of us get a third, and they were partners prior. So they use one of their LLCs. So it's 2/3 and a third, my LLC, 2/3 their LLC. But yeah, it's 30.
Okay. And they are the property manager of that property. So do they get a fee first and then you guys split profit?
Yeah, he charges a whopping 3%.
Right.
Yeah.
And then you split after that.
Correct.
Profits.
Yep.
And you've always had distributions, or how long did it take to get distributions?
I think it took 2 months just because we were trying to build up the.
Crazy. Good.
Sure.
That's so good. What about debt? You jumped over that story. How did you get debt for, that's a lot of money still, $650,000.
So as far as the bank financing, you mean?
Yeah. And who brought the initial equity capital too?
Sure. Yeah. So we each brought our own. It was 54,000 a piece down. And those guys I think they had a line of credit or something that they used. But for me, I had to sell a house, sell my buddy my house, buy another house, and all that kind of stuff. But I was able to do it. And then I also got that $20,000 1 month, 10% loan. But it's what I had to do. And to be honest with you, my wife thought I was crazy because I was going to give him $2,000 on a $20,000 loan after 1 month.
Yeah.
But I mean, I'm making $1,500 a month cash flow. So it was 1 month's cash flow basically paid for.
You know what? That crazy factor is always going to happen, everybody. If you're listening to this show and someone says you're crazy when you go to do your first deal, you know, sometimes they might be right. So you have to have wisdom. They may actually be right. That's not a good deal. Or they just mean you're jumping through the looking glass and they don't know how to see through that. Well, that's what capital hacking is seeing through the code, I think. So it does sound crazy. So in a way, she's right. It was crazy for you to do that. And what was it like, that conversation where you tried to say, I get your point. It's expensive to do this, but here, honey, let me share this with you. Like that whole dialogue, she's not probably doing as much as what you were for real estate education, I imagine.
Yeah, and that's exactly what it was. You know, I had listened to all the podcasts, had all the education in the back of my mind, and she didn't have any of it. She doesn't like real estate podcasts at all. And so I had to pull out my inner Russ Gray and do the numbers and then show her the numbers. And that's how I made her make sense. So, you know, once I could show her on paper that this $2,000 fee that I'm going to pay is going to be paid back in basically 1 month. And then from there on out, you know, $1,500 a month. It didn't take much convincing at that point.
Okay. But, you know, even for her, I imagine it still takes time to see it happen. And I know that's been the case for Melanie and I and all of our families that we work with. It's like, I can't believe private real estate investing works because it sounds so much better than Wall Street. And that people actually do usually say, I can't believe this is possible. You know, they'll say things like that where Wall Street, remember, you probably haven't heard my, maybe you have the carousel. I call it the golden carousel. The joke about Wall Street is you can never touch your money, right? If you put your money in when it's good, you can't take it out. You can't touch it. If you take it out when if it's bad, you can't take it out. You can't touch it. If you put it in a retirement account, you can't touch it. You're not old enough. You can't touch it. Doesn't do anything for you. And then you're old. And this is the kick in the butt. Okay. Maybe even then the groin. You're old now. And it's time for you to take your retirement out. and they tell you not to take it out. Just take the distributions on dividends.
Right.
It's like you never get to take it. Oh, God. Don't touch it. That's the number one rule of Wall Street. Don't touch it.
Yeah, it's like if you take it out, they start losing money or something.
Right. So, well, you have done a nice job, and I think you've taught the audience. What do you think you just learned from doing a podcast?
Man, I think I just learned that it's not as scary as I thought it was going to be.
Yeah.
You know, it's just a conversation, and I like to converse, and I like education. I like helping other people, and really and truly, anybody can do this. I mean, I don't have a college degree. I'm a firefighter. I'm not even a computer guy. So, you know, anybody can do this. It's just getting the education. And frankly, podcasting is the best platform to do so. I mean, I'd like to think I have a college education for free through podcasting.
Yeah, you probably do on business, at least. Definitely. So do you want to make a pitch, Josh, to have people write the reviews and support your effort?
Yeah, I'd love that. I would appreciate everybody's input. Whether or not you vote for me, that's okay. I would certainly appreciate that, because this is really an opportunity, and I think everybody should take it if you have any interest in podcasting at all. Yeah, just let me know. Let me know how I did. I've never done this. I look forward to doing more of it, and I could always improve, and I understand that. And so, yeah, just let me know what you think. Let me know how I did, and yeah, vote for me. That'd be amazing. I really appreciate it.
Say hello to your lovely wife, Connie, and 2 great boys. I should have talked to you about that earlier.
Yeah.
And enjoy hunting for reviews, Mr. Josh Oak. I know you're a hunter, but make everybody hit the review sites. Of course, Apple Podcasts is the biggest read review. So if you could go there, hit Capital Hacking, just go to the podcast, hit review at the bottom, leave the 5-star, because of course you love oak trees, and then tell us what you want to say about Josh. Thank you, buddy. We'll talk to you soon.
Thank you, Josh. I really appreciate the opportunity.